range is a severe range that's gonna last 1 week maybe, and we can still have further pullbacks to the downside. But well, let's wait a little bit. I don't know if maybe Xenia just let the log names is yesterday, maybe forgot. Okay, I've started. Okay, thanks a lot, Xenia, for the webinar, for the recording. So let's begin officially. Welcome everybody, welcome to my webinar, broadcasting live from Mexico City. This is me, Alvarado. This is my free YouTube channel, and in case you haven't subscribed to it, you go there and type iiivb Trading Room channel. It's been kind of quiet lately because I've been uploading some of the videos, but since I've been very busy trying to recover last week losses that finally I did yesterday, well, now I have time to calm down a little bit and just start posting again. This is my Google Plus account if you want to add me. The same, iiivb Trading Room. And when you go to YouTube and you search my channel, this shows up. You click subscribe. Today is Friday, March 17th, 2017. And it's 1 a.m., 15 minutes past the hour almost here in Mexico. And if I'm not wrong, yeah, it's 7 a.m., 30 minutes past the hour GMT time. I believe that 2 weeks from now, I will have daylight saving time adjustment or something. But remember that a webinar will always take place at 7 a.m. GMT time. So that doesn't change. So let's begin with the oldest thing that we've been reviewing, the same old material. Okay, yes, this is to start showing. Because yesterday I was not, by the way, yesterday I was not able to show up. Precisely because of that fact of being after FOMC trading, that actually I needed to recover last week losses. That if you remember, I was saying that maybe that would take me 2 weeks or even more. So dollar Mexican peso actually did what in my lab account I had configured that I was expecting a huge movement to the downside to the 119.40. It even went further down to the 119.10 or something like that. So yeah, I was super tired yesterday. I thought I could make it to broadcast yesterday at the same time as usual, but I couldn't. But I actually broadcasted 1 hour. You see what time was? Midday GMT time to 1 p.m. GMT time, just after ducked out. So yeah, I have a time to explain a little bit what the trading price action was after FOMC. I was commenting that I wanted to wait a little bit just to start using my price boxes as references, just to see exactly what the markets are up to. And as I explained yesterday, I've been saying during other webinars, what I believe about the market is this price is like a little animal. And when you have sudden moves from one region to another, you have wild news, etc., this little animal spooks, panics, hides, and tries to when it's moved to another region, the first of all is trying to find refuge, food, and the first times you can see that maybe it's kind of erratic, the behavioral patterns in this animal. But as the time passes, this animal will adapt to the circumstances surrounding it. And then you will start seeing again the behavioral patterns. But first of all, this animal needs to resolve the urgent things like finding ground, new ground. This is the same thing that happens after major news. I'm not really that informed what happened during the speech of Yellen, because I believe that words in trading, in the world of finances, price is the ultimate word. Not what people say, but what markets understood of what somebody said reflected in price. That's all that matters to me. The only thing that I say is that she used a little part of her time to clarify that these rate hikes were not related to the supposed fiscal stimulus by Donald Trump. So that sends a signal of reassuring independence. I believe that that was necessary because, as I've been commenting, Donald Trump at the beginning was feeling very brave and very strong and very bossy, that he could make whatever he wants just because he signs executive orders. Now, reality has reached him, and he has realized that actually he's maybe the biggest and best democracy in the world. And even if a flaw in the democracy made him get into the presidency, the United States is showing to the world that institutionally, it's one of the strongest countries in the world. That actually nobody's single will be imposed just because it's a president. Something that doesn't happen in other countries. But fortunately, the United States have been showing to the world that it's an institutional one. That is far from, at least so far from becoming a fascist state or something. So Donald Trump has been reduced, cooled down, chilled out, and he has realized that it's not that easy. I can bet you that he's now realizing the major task that he has in front, and he cannot figure out how to solve it, because he's only engaging with his Islamophobic reforms, etc. But he's not really attending the important things because he doesn't know. So all this, the world was fearing a huge shadow and imagining that huge shadow corresponded to a huge individual. In this case, maybe a radicalized individual. But time passed and we just realized that this was a small guy with a huge spotlight projecting a huge shadow. So now the markets started trusting the institutionality in the United States. So that is why money is coming back. And coming again to relating that to the FOMC thing. At the beginning, people even thought that he could even go against the law, trying to push Fed to do what he wanted. But Donald Trump stopped bullying Mrs. Yellen since he got to the presidency, sending the first signals that it's going to be in the Fed independency will continue. And yesterday we had Yellen saying and reassuring that independence. So that it's like, okay, we can continue doing business more or less as we thought before. Here we have a comment. Racer X, they give him the necessary amount of Fox TV. Yeah, the other time, I am a huge fan of The Simpsons. Actually, super fan. And I have been realizing how, I like Homer Simpson. But in a lot of aspects, Donald Trump is like him. It's super ordinary. Well, Homer is not precisely this arrogant like Donald Trump, etc., but it's an ordinary person. And Donald Trump is. Inside his head, his values, is an ordinary person. He's not extraordinary. And you need extraordinary people to lead others. Because others, let's say us, we don't have extraordinary skills, extraordinary views. We choose leaders because they have a vision to share with us and we trust and we follow. But this guy has demonstrated that the only thing that he had was a lot of anger, a lot of prejudices, a lot of things that won't work if you are in the presidency. What I believe is that he will be continuing exhausting himself in this stupid confrontation now with the Supreme Court, that apparently he's going to push this new immigration ban up to the Supreme Court, and he's going to lose, and it's going to be officially isolated. Because now even the Republican Party, again, occasionally you see comments from Republicans not supporting him. Now, the markets are reading this like, okay, this guy is playing with his new toys. Unfortunately, that will have a huge share of negative consequences to the United States because I don't know if he thinks about something else than immigration reforms, building that stupid wall, and giving more money to the military. I don't know if his mind really scopes much more what the United States' role mean in the world. I really don't think so. So, but at least some things maybe, if they stay as they are, they will continue having positive effects, like for example the economy. And maybe the only good things that he could leave as a legacy for the United States is, yeah, maybe some of his entrepreneurial experience could be applied to the United States. Some of it, because it's a very different thing being a multi-billionaire than being a president. You have a complete set of things and challenges that are not related to being a billionaire. I mean, a billionaire never has to lead with a worry of a nuclear war, for example, of being able to push a button or trying to think if the other is going to push it first. And because it's your responsibility to anticipate that. A billionaire doesn't do that. So the sell-off in the dollar after FOMC speech, etc. Surprised me because it was more extended than what I expected, but the fundamentals are intact. I am reading this more or less like the markets just realized that, yes, when if you have somebody in a store and you suddenly have somebody in the speaker saying, in the next 30 minutes, you will have 30% of discounts in electronics, I can bet you that everybody's going to drop everything and is going to run to the electronics part of the store. And they will try to grab a lot of things, etc. But that's because it's like mass hysteria, and the markets are not exempt of that. So what I believe now that, yeah, maybe they thought the thing is that during a lot of months since Donald Trump was elected, the markets were fearful, like cautious. So at the first signal that, at the first starting signal of things are safe, at least in the financial side, everybody wanted to compensate those months buying and buying and buying, and suddenly they just realized that, hey, we have a lot of time. We don't need to buy dollars if there was no future today. It's going to be a lot of future. We have at least 1 year to administrate our dollar buying, our etc. They are now buying a lot of in the stock markets, so maybe the currency markets are going to get easier and calmer. Dr. Phil, here it says, Dr. Feelgood writes the RX. I'm afraid I don't understand. Dr. Feelgood writes the RX. What is that? RX are X-rays, or what? Ah, you mean the prescription medicines, Dr. Feelgood. But who's you talking about? Donald Trump? So, well, this is the March 11th post in dollar yen, 4 hours. As you can see, well, these levels worked as long as the market respected them. They respected them very accurately. They were hovering here a zone for quite a while, and then they banged. They simply evaporated this level. So I believe this is the last time I will be showing this, because these levels are, even though in time they should be valid, of course the validity of this was ruling out this kind of volatility. Well, this is only the Mexican peso stuff that I want to show you. Yesterday I was explaining this. I was expecting a movement to the downside. Being honest, what I thought that was going to happen after FOMC, that it was here the prices, that the market was going to retest this and then move down, sorry. But here they just decided to immediately start selling. But look when it happened. I was drawing the support, and I put like a limit date for being respected. Just after this support ended its expiration date, there was like an open cliff to the downside, and that is exactly what happened. So this is the power of these boxes, that they are not necessarily all correct, all super precise, and of course I will be having wrong interpretations of the markets. But once we start grabbing the feeling of the market, we can actually start. I'm going to tell you something, it's much more easier, but it takes a set of very special skills to predict the timing of when something important could happen, regardless if you know the direction, than trying to predict the direction of something. In this case, well, my call was correct that I was expecting a big movement to the downside in dollar Mexican peso, but the exact timing, it was uncertain. But the only thing that I knew, and I commented here in other webinars, is that this support, when this support ends its function, there won't be any other further support to stop this if the market decides, in fact, selling off. And this is what happened. The difference in timing, it is like what? 1, 2, 3, just 4 candles after this ended, the price was here. But if you see here, the market didn't make any effort to try to use this as a support. Why? Because a support, not all the supports are made equal, and they have expiration dates. I mean, they are there and they could still be working. But the idea is that there's like a optimal timing for those support and resistances to continue working with huge accuracy and strength. And this expired and then boom. So this is more or less the kind of things that I would like to give you as a webinarist to make your own trading plans. This is another one that this was on March 13th, and this support was, this is dollar yen, was evaporated immediately, and even after this one that was a very thin one, as you can see, I was not expecting a lot of support here, and I was expecting much more support here. That is why I was telling you that, yeah, this was like an overselling of a compensating and overbuying sentiment before FOMC, when the markets realize that maybe we have time, and it's better for everybody to try to keep the currency markets more or less stable, maybe trending, but with way less volatility. Now what the markets are expecting is way less volatility in the majors, but way less than before FOMC. But that volatility was exchanged to the stock exchanges. There is where you will start seeing a lot of volatility bullishly. And the currency markets will continue doing its things, but gradually. The volatility, and let's put it this way, greed has a new home. That is not going to be the currency markets. It's going to be the stock market. So the volatility will be reduced. So that opens opportunities for traders to start considering maybe consolidating and opening long-term trades that maybe in 1 or 2 months could shoot up in your favor in any case, and you could have accumulated at good prices. But of course, as retail traders, we don't have like 1 billion of opportunities to buy dollar yen, and we are going to administrate that during the next 2 months. No, we usually take 1 position and white position, and that's it. But I want you to show you this. Even though we in this chart, in this 4-hour chart, at that time I didn't draw any kind of support here because of course the important ones were these ones close to price. But look at this, how the market, this no-brainer support, used it as a resistance, but now everything is over. In any cases, these price boxes could continue being valid. Now there is no barrier to have a sudden spike to the upside up to here, but in the other hand, at least using only these price boxes, we don't have any kind of support to avoid any kind of sell-off. But this one, in this 4-hour posted on March 13th. This is the before, just after the, at the beginning of this week, I posted this on March 14th to try to anticipate what the dollar yen could do after FOMC. This is a daily chart. This is much more current and updated. Of course, as I said, I was explaining, if you remember, that I honestly thought that after FOMC we could have a move to the upside, make here a resistance, then the market could drop because of exhaustion. That I was really wanting to see for this trend to really consolidate in the future, for the 120, 120 and even the 130 in the next months or years, we need to start having more consolidation zones. So I was saying that even having a drop could be good for the long trend on this. But what I was not expecting is this huge movement to the downside. But here, as you can see, in that moment, in March 14th, we had a descending triangle in the daily charts, and the markets recognized that and just started buying it here. The problem here is that this box, it depends the minor time frames, what happens in the minor time frames and in the updated chart that I will just show you in some minutes, to see if this actually manages to get above and get inside this price box that is surrounding the 114, or if actually it starts using it as a resistance and maybe to continue dropping to retest the 112. Let's remember that just after retesting the 112, we had this massive movement. So yeah, it would make complete sense for long-term views to have another retest of this, another movement to the upside, and another retest of this, another movement to the upside. We need to adapt to the price action and not getting married to our positions, because yes, I am fundamentally bullish, but I already know that being biased bullishly fundamentally could take months or years to have your position in big profits. In any case, that you're right. If you're wrong, you need to use a stop loss, of course, to avoid being massively against, having massive losses in your position. Okay. So yeah, this looks like if we only use the boxes that I posted on March 14 and after FOMC, well, here we could still, fundamentally this has changed nothing, so I'm still bullishly biased here. So yeah, maybe we could have here a retest and then a retest of this. So we need new information to try to configure what we believe could happen the next, month? So that is what I just did. I need to tell you something. This is a rehearsal. I am not that completely, absolutely sure of these boxes. Because, bottom line, the market just became super tight, super range bound. All the conditions, this sell-off amidst a bullish fundamental trend in dollar yen is the best scenario to have all this range, people buying at the bottom, buying at the bottom. Well, here I'm going to explain why I left this, buying at the bottom. As you can see, the boxes are almost symmetrical. Look the thickness. Even these resistances are very close to this. The supports are thicker than the resistances. But we have like 4 more important resistance zones here, and we just have 2 good supports. So let's remember that in the previous image I was saying that using the daily price action boxes that I posted on Monday, it depended what the market does here to know if it will be able to jump at the 114 daily box that would make it over like in here. So this makes sense. This is a real support zone. But as you can see, we don't have a lot of things to do here. in my opinion, we have a very dangerous time here that is on Tuesday, March 21st. Just at the beginning of the spring. And I don't know, I tended not to believe that this was true, but yes, there are cycle things in life that even people unconsciously follow them. And this kind of stuff like spring, summer, when they astronomically hit the Earth, they should have a major effect on humans even if we don't realize it. Because it's a planetary event. So if something is going to happen negatively on dollar yen, switching all my bias on dollar yen could happen more or less that day. Now you see how different is trading when you put these kind of boxes? Assuming that they are more or less correct. Because of course if you draw boxes and they are wrong, well, it doesn't matter if you buy, sell, use time or not. This could actually have a very negative effect. So this is why I believe actually the spring enters this day, in March 20th. If I'm not wrong, it's 4 a.m. GMT time. But formally, it is used to believe that it starts 21. So, well, I believe that if something negative that could open a path, like what happened in Mexican dollar, Mexican peso, that I said we have a support that could be good enough up to this day. After this day, there's a cliff open to the downside. This is the same thing. Remembering the daily boxes, we have a very big box in the 114, more or less, occupying all this. So if the market manages to get inside this, the most likely thing is it will continue jumping. We have some here the same thing in the same date. That in any case the market jumps above. Even being in the daily price box here, it could have chances or will try to break that box to the upside. If the market, I believe it's here by that date. So bottom line, my plan for dollar yen is this one. We have, as we can see here, an ascending trend. We have few things to do here on this range. That's what I believe. I believe that trading dollar yen, that's what I was supposedly changing my robot and strategic contest to trade dollar Mexican peso, because I assumed that dollar yen was getting into a range bound condition. Actually, that happened. Unfortunately, my robot, the setup in my robot in the strategy contest didn't profit from that huge drop because my configuration was not optimal. But the idea is that precisely my robot was trying to anticipate this breakout to the downside. But well, it didn't. The trade was not open, so I cannot do anything. Okay. So well, we have this support, as you can see, and look at this. This is not coincidence. This triangle edges touches gets to its this axis. I believe it's the word, or apex. I don't know. It's also this day. So it's not only the astronomical thing in people's mind when the spring starts, but it's this pattern. So this region will become lethal for the next price action of dollar yen. We have enough support to the downside due to this trend line and this support, and that is the psychological 113. The market could even touch here and stabilize here and try to jump above. But the thing is, what starts happening here? If the price is hovering down this zone and maybe retesting this, and by this moment, that is why I put this here, this cliff here. If price doesn't manage to get above this in this stage of time, it will be pretty much impossible that dollar yen will make it above this, because then the strengthening of this resistance will increase. Then it will face almost this immediately. Then we will face this immediately. And even if we have a massive spike, we could have the 114 psychologically stopping it and making it drop. So more or less by Monday next week, that you can see is 20, is the clue day, at least in my opinion, for dollar yen. I don't expect much today. Maybe the market will just hover some less here, maybe retest here. I don't know. Maybe we should only watch where this closes this week, if it closes inside or outside this triangle. What it does on Monday is what really would make me worry. If the price is inside a triangle, we still have chances that we could make some kind of this by March 21st and then make it stabilize here. If we are very momentum and the momentum comes and the buying spree comes immediately to the market just after FOMC, what I believe that it will happen again on Monday. Astronomically on Monday, spring starts. Astronomically on Monday, I should expect this to declare its intention to the upside. At least to stabilize, but above this line, here, not here. Because it's not the same thing stabilizing a price below a line that now you see how important this line is. This is not just a single triangle as upper line. It's surrounded by these two resistances separated by this in time. So this section of the upper part of that triangle and this is super strong. The only weakness is here. So astronomically we have, and astronomically is the last day that I expect to have this support on Monday. So yeah, if this is meant to hover above this line for the rest of the month, we need to have the price being more or less here by Monday. So then on Tuesday we could have kind of to be able to use this, and this as supports and not as resistances. Anyways, even if the price is here by Tuesday, we still have this cliff. And yeah, if we have a pseudo breakout here for some reason on Tuesday, yeah, the risks are higher. So just be aware if you are holding long positions or you want to open long positions on dollar yen at this time on Tuesday. Because yeah, it depends, and overall, just watch what happened on dollar Mexican peso. That doesn't mean that every time this will happen, but when it happens, if the market is really reading this, we could say, you know what, let's push this price even lower, maybe to the 111 or even to the 110. That is much more psychological. So by Monday, I could expect. What I could expect maybe on Monday is that the price at least makes it to test this box, to make this, and maybe come back and do this. But being able on Monday to touch this price box would let me believe that we could, for the next of the days next week, range here that maybe the other next week we could continue to the upside. Or stabilize in this range that is closer to 114 inside that price action box that I drew on Monday in the daily chart. Okay. Potential other chances that plays that the dollar yen could do. Well, the market could start doing this, testing this, again testing this, testing this. And well, if by Monday we are here, I could expect that maybe dollar yen would try to sell off this day. Maybe not waiting for the retest here. Maybe just continue selling off. So we will be watching closely, and you should be watching closely dollar yen activity. As you can see, the other maybe not that likely a scenario is that we have this push to the upside, breakout here, which in the timing aspect, if we had any kind of huge movement here, there are possibilities, if you may, to continue the movement to the upside. maybe to the 115 or to retest this, because let's remember that at times the markets read this kind of stuff as gaps. If you take this candle out of here, this is an hourly candle, this should be a gap. So yeah, at times the markets read this as, okay, let's close it. If it manages to close it here, it will be way easier to do it today or tomorrow or Monday than on Tuesday. Because on Tuesday we have a resistance just here. Besides, we have here a psychological level that is usually difficult to break, but we could make it maybe overextending and making it drop here and to use all this as support. Okay. Even if this retest tries to be done on Monday, it could jump here and use all this as support. In any case, the price is above today or on Tuesday by here, we could have at least chances that the market will try to again close this if it hasn't happened before, like for example today, the market will try to get here first. So happening here could come back here or could come back here and jump or do something like this. But eventually what I believe is that overall the next week, if dollar yen manages to stay above this line, will continue ranging but above this. If it doesn't manage to do that, what I believe is that the chances of having here a retest to downside are high. What I mean with this doesn't mean a sell-off. I mean fundamentally it's not diagnosed. Fundamentally it's a buying, opportunity, fundamentally speaking. But again, fundamental trades could take months before to start getting positive. Wait a minute, please. I just grabbed my cup of coffee. Well, I suggest you to take one coffee. So this is what I believe is going to happen. As you can see, it tends to be boring because it's reflecting a range-bound condition, not a trending one. We are in a range-bound consolidation accumulative stage amidst a fundamental medium-long-term bullish trend. Don't ask me to repeat that because I just don't even know how I link those words in order. But the thing is, having the context that we're still heading to the upside gives you a compass. These boxes give you a compass of important prices and overall timing. If we have a sell-off here, we could have a drop to the 112 and then a jump above quickly. I mean, that could happen. This is only a cliff. But below here, there's huge layers of support, a lot of institutional guys, hedge funds buying dollar and selling yen. But yeah, the sell-off could happen. So if you hold along here, let's imagine that the price is here on Tuesday, and you have longs, using a stop loss here is not smart. This is why in this stage of time, holding dollar yen changes everything. Changes the game, because if you hold longs here, a stop loss at 112, 1260 or 112.50 should be good enough maybe. But if you hold longs here, you need to necessarily increase the stop loss. So you as a retail trader, when you are imposed into a situation where you need to increase your stop losses, under these circumstances, you simply close your trade or go short if you believe that this will go down. I mean, holding longs here, this is what mostly likely could trigger the sell-off. That naturally at this stage of time, holding a stop loss here simply would become irrelevant and useless. So what will happen? A lot of people could try to sell it. To retest what? I guess I just, okay, let me just put this again. There it is. Here is the daily chart, the price boxes. So you're talking about that if by here we're facing this, we could have a sell-off up to where? Here. So as you can see, there is no, we still have support here, and fundamentally this is a super support. Fundamentally, they work, the fundamental traders work as accumulative patterns, meaning if you believe fundamentally something's going up, the lower it gets, the more you buy. The lower it gets, the more you buy. The lower it gets, the more you buy. So yeah, having even the price moving back to the 112 could be completely in agreement with long-term buyers. If by Tuesday we have the sell-off, we could have the sell-off retesting this low and even below. Let's say 112.50. Just below here. Here, all the stop losses of long trades here, since we don't have temporarily this support, this is evaporated temporarily, those stop losses would mean buying opportunities. So I believe that this is everything these boxes could teach us for the next 2 days. If you see, I spent very few time trying to explain what could happen here above, because if we have the price moving here, even moving here, we will have here a kind of, let's say, resistance, but not derived from this. It's derived from this, a daily one. And we could be still here where these two supports converge. Well, I mean, if the market makes it up to here, let's say on Tuesday, we should be hitting this resistance. So we could have a stabilization here, but above the 114. If at this time, let's say, I don't know what day this could be, we know that we will be again above this support zone. Maybe these trading boxes would be expired already. But the thing is that here, more or less next week, if something of that nature happens, the price should be hovering here. And maybe using this as a support to continue the jump to the upside. So we still have chances. We use the loss of probability, and that 80% of the time the markets tend to range. We have 80% of chances that the market will figure out a scenario where this thing, making it back immediately and then continue moving up immediately, the most desirable thing for that scenario is to delay it some weeks, maybe, to give market room to stabilize again. That is the nature of the market. The nature of the market is not speculative. You need to give chance to people buying real dollars, spending real yen, to adapt to the new conditions. If you don't allow them to do that, eventually you could have a wild adjustment. So before a major shift of trend, you need to allow people to start gradually adapting, and maybe the price then could shoot up. But you give the chances, the economies, to stabilize and to precisely make the things that they need to do to warranty that that trend, when it starts, it could be held by months, for example. So it's important and it's critical, and we need to maneuver very delicately. When we have sell-offs in fundamental bullish trends, they need to be exploited the best way the markets can exploit them to warranty, because the best quality supports that we find in fundamental trends, the more time and they will move way further in the direction that we're anticipating. than if we just suddenly make quick movements and make a quick 300 pip move. Well, it could simply come back as fast as it got there, or even faster. So I believe it's time to call it a webinar, guys and girls. Just let me share you again this. As you can see, these trading boxes allow some kind of gains overall if we have a breakout here today. But if not, and I don't think that will happen today, maybe I believe that on Monday we could have the price here, on Tuesday making something here, maybe here trying to retest, and maybe here trying to start here to support, have kind of a support to close more or less the week next week above 114 or just below it. Of course, I will be updating these price boxes accordingly next week, overall on Tuesday and on Wednesday, according to what happened, just to make have a much more concrete view of the structure of what I believe that the yen is doing. Okay, so it's time to call it a webinar, guys and dolls. I really want to thank all the people, all the guests, the Rocas, for being here, for being around. Of course, David, thanks a lot for assisting, for logging in. I really appreciate you both being here, and of course, Xenia for recording, for hosting. Thanks a lot. And remember that this weekend, the weekends are done for. If I was a normal human being, I should be doing normal things, but I usually tend to love this so much that I dedicate even weekends for analyzing markets, etc. But yeah, I wish that you are more normal and that weekends are to enjoy family, enjoy friends, go outside to have a recreative activity, so you can come back on Monday with renewed energies and views, and with all the energy necessary. Remember that today at 18 GMT time, Dukascopy cuts leverage to 1 to 30, and that what I mostly recommend to you is just not to have open anything this weekend. Just wait for Monday to see how we open, and then we can start using these price boxes maybe to figure out a plan. So that's, I believe it's everything for this week, guys and girls. Remember that I expect you on Monday, same time, same place. Remember to trade safe, be safe, and bye-bye.